Come out, have a cup of coffee with us and network and hear about this exciting topic that we're going to be talking about today. So we're going to talk about the 22 pass-through deduction. So this was the one area that, in terms of putting together this event, this was the one area that what people really wanted to talk the most about. Very, very complex area of the code, along with the other complex areas. Actually had there's been actually situations where I know in our firm we've actually had debates over what it really said. Very attractive watching accountants argue over tax codes. So anyhow, so this part, we're going to be talking about this 20% pass-through deduction, and it's applicable to what we call pass-through entities. So what a pass-through entity is either a limited liability company or a limited liability partnership, S corporation, sole proprietorship, or general or limited partnerships. It's not a C corporation. As we discussed at the first slide, C corporations, 21%, they've gone from a 35%, the highest tax bracket, to a flat 21%. They're happy as a pig and you know what. So we're not talking about those guys. We're talking about the pass-through entities. At the very top, a pass-through entity, which we defined before, you're allowed to deduct 20% of what's called qualified business income, which is income generated by the company, but does not include things like interest income, dividend income, but it's pretty much the pure business income of the entity. If you're a married individual, and your taxable income is under $315,000, then all of this stuff doesn't qualify, and you can take the 20% deduction. Okay? If you're single, it's $157,500. Now, the tax planning thing is how do I get my $1 million of taxable income down to $315,000? That's where a significant amount of aggressive tax planning has to be done now as opposed to later on. The deduction does not apply to specified service businesses, which means any business that involves the performance of services where the principal asset of such trade or business is the reputation or skill of one or more employees of owners. Consulting, financial services, accounting, health, law, any type of personal service business, you're not allowed to take this 20% pass-through deduction. There is an exception, but we're going to talk about that in a second. So in other words, if you're in the business of manufacturing widgets, you still qualify for the 20% deduction. However, if you're in the business of teaching people how to sell stuff, or you're in the business of consulting or coaching, then you fall under this pass-through. You're not going to be allowed to take the 20% deduction. However, professional services does not include anywhere in engineering and architecture. What type of business uses engineering and architecture? Real estate. I wonder why. Now, however, all of this stuff is thrown out if you're married and you're under $315,000 in taxable income, or you're single and you're under $157,500 as an individual. Adam owns 30% of an LLC, ABC LLC. He's got ordinary income of $3 million. He pays his employees $1 million. I think it's one employee, his wife. I'm just kidding. And he's got the basis of his property, his furniture, his fixtures, his equipment, $100,000. Let's see what happens here. So, first thing you do is you do the calculation of what the initial 20% deduction is going to be. So again, net profit was $3 million. You take 20% of $3 million. However, Adam only has a 30% equity interest. So 20% of $3 million times 30% equity interest is $180,000. So that's the first top line calculation. Then you have to do the wage part of the calculation. The wage part is the greater of the W-2 wages, which we said was $1 million, times 50% deduction, times equity interest. That comes to $150,000. And then he's got a second, which includes the basis of his property. That comes to $75,000. So the greater of these two is $150,000. Now, the final deduction amount is the lesser of 150 or 180. So Adam's eligible deduction is $150,000.
Everybody got it? Because I don't.
Let's go. Let's do one more. Jack is 50% owner of DEF. Ordinary income $750. Jack, in addition to the $750, he also pays himself $150. So in other words, his total compensation is $900,000. He's got no employees. So there's a lot of people out there that are these single member LLCs that have no employees. Let's take a look at what happens here. So top line, he gets $750 times 20% times his 50% equity interest. $750 for the first calculation. Okay? $75,000. I apologize. Now, when we go to the W-2 wages, because he's got zero W-2 wages, the calculation here is 0. Okay? So his 20% deduction is the lesser of $75,000 or 0, or he gets a 0 deduction. Point being is that if you're a single member LLC with no employees, you get a 0 deduction. 3 different entities: sole proprietorship, S corp, partnership, LLC. Everybody makes $1 million. Okay? Over 315, we got to go through the wage calculation. All right. Sole proprietorship. The tentative deduction is $200,000, which is 20% of $1 million. So now you have to do the 50% of wage exclusion. There's no wages. So 50% of 0 is 0. It's the lower of this to this, it's 0. Let's go over to partnership LLC. $1 million. The person gives themselves a guaranteed payment of $250. Net income, $750. Okay? The qualified business income that you're going to calculate 20% on, $750. 20% of $750 is $150. 50% of W-2 wages, there are no W-2 wages, is 0. The lesser of this or this is 0.
But if you do have employees.
Yeah, coming? Yep, getting right there. The answer is yes. S corporation, $1 million. The shareholder pays himself $250,000. Net income, $750. Qualified business income, $750. Tentative deduction, 20% of $750 is $150. Wage deduction, 50% of W-2 wages. 50% of W-2 wages is $125. The 20% deduction is the lower of this or this, $125.